Let's start. Wells Fargo is the second largest US bank. That's by market cap, and it focuses on retail and corporate lending and transactional banking. No surprise there?
Right, and of course it's important because Hillary Clinton has sort of been held up as someone who is very critical of Wall Street and this whole, post 2008, 2009. But on the other hand, she's done lots of speeches and paid speeches as well, often as the guest of these banks and their clients.
Market cap $223.6 billion US dollars, trades on a PE of 11.1 and a dividend yield here of 3.4%.
And it's been in the news a lot. Yes, let's have a look at the chart. It's been in the news a lot recently because they got fingered for a scam internally where staff were getting incentivized to cross-sell their customers. And what some of these staff would do would be to fraudulently open accounts for customers and then shut them down a few months later.
We've also seen the departure of the CEO.
Correct. He fell on his sword last week. That's John Stumpf on account of this debacle. And it's because it got onto the sort of chattering classes and it was in the news. He had to appear in front of Congress. And it was really a regrettable and disastrous outcome.
Just to be clear, we have no US banks in the international portfolio.
Yes, but I've got quite a substantial personal exposure to Wells Fargo, as do other Vestact clients. And the reason, interestingly, is we picked it is because it didn't have a lot of corporate and investment banking like Goldman Sachs or JP Morgan. We thought, well, here's a nice clean bank that didn't disgrace itself back in the financial crisis.
Do you still believe it's a nice clean bank, given the latest furore?
Yeah, look, it's got, 70 million customers. It's got like 160,000 employees. It fired about 3,000 people because of this scam. So, imagine if you had a South African bank where they said to their staff, listen, we're going to pay you some incentives.
150,000 people were fired because of the latest scam.
No, 150,000 employees in total. And they fired about 3,000 employees.
I thought I had got the number wrong. I was a little worried.
Maybe I got it wrong. But so
they fired 3,000 employees.
But, for an organization that big, you'd have that sort of staff attrition anyway. And, if people were found guilty of like opening bogus accounts for clients and then shutting them down a couple of days later, it's a good thing they were fired. Because that sort of breach of culture is not what you want.
Look, it sounds as though you're trying to convince yourself on this one. Are you worried about your holding in Wells Fargo, or are you holding this for the long term?
No, we're holding on to this and we're not particularly concerned. Look, I'll give you your point. You can't just say it's a few bad apples. When you've got that many bad apples, maybe you need to look at the way you choose your apples or the way your systems reward the apples.
But it is interesting. I mean, you have put a case out for Wells Fargo. You don't have, as a rule, you don't have much banking exposure in any of your portfolios.
We've got a bit of First Rand here in our local portfolio. And when we looked at the US portfolio for the Hot Stock Show, we didn't go into Wells Fargo, even though that was before this crisis blew in. So that sort of tells you it's not necessarily for everyone. But let's understand.
The crucial point is what happens now. If we have a Clinton win,
yes, then in my view, it's business as usual on Wall Street, because the idea that if Bernie Sanders had won the Democratic nomination, or one of the more sort of left-wing Democrats, it would have been different. But Hillary Clinton is very centrist in her approach.
So business as usual with Hillary. If, however, we see the wild card factor coming,
who the hell knows?
What would happen?
I don't know. I mean, in theory, Donald Trump is someone who's used banks an enormous amount in his career developing resorts. He's very fond of, levered finance. He's talked a lot about how you must borrow a lot of money from banks because then if you're in trouble, it's their problem, not yours, that kind of stuff. I don't know. It's hard to say.
Well, let's call it. So you have got, obviously, the two scenarios that may pan out. We are understanding that the one is more likely than the other.
Yes.
On that note, hot or not?
Hot for me, and hot on two counts. Firstly, because I think the whole sector will rally on a Hillary Clinton win. And secondly, because Wells Fargo is sort of beaten up at the moment. But in my view, it's got recovery potential from here.